Okay, so thank you everyone for joining us for our September members talk at NASGP. I'm here with Tori Ferguson, who's a tax manager at Honey Barrett. She's going to give a talk today, and we're also going to take some time to field questions. They don't have to be about starting out with GP locum accounts, they might be on other topics, but if anything arises, has arisen in your personal finances that you want to talk about, we just ask that questions be given generally, because we don't want to try and give any specific financial or tax advice on the call. And also bear in mind that if you're going through it, there's probably somebody else who is. So if you can make your question general, you can help yourself and your colleagues as well. Okay, Tori, thank you.
Thank you very much. Thank you so much for inviting me to be here today. I really appreciate it. And for the members that have joined, if you're just starting to contemplate locuming, or have just started, in fact, having just qualified as a GP, then congratulations to you. So the topic of this talk initially was starting out as a locum. So I thought it might be helpful just to give 10 brief points, 10 pointers, I should say, on things to consider or things that may help you when you're starting out. And this, if it sounds really basic and you think, oh, that's so obvious, then great, I've done my job well. But do consider these. So I'm just going to run through 10 points, things to think of when you start locuming. I'm going to run through a couple of things to consider about reducing your tax. That was a question that came up and was presented to me. And if we have time, depending on how many questions there are, I may delve into IR35. That was another topic that was presented to me to have a brief chat about. When it comes to questions as well, if you would like to talk about NHS pensions or PCSE, I'm more than happy to do that with you. So in terms of starting out, when you become self-employed initially, and this isn't just as a locum, this is any self-employment. So if you decided you were going to be salaried and do a side hustle in baking the most delicious brownies ever, these are still things that you would need to think about. Specifically, you need to be taking an active interest in your personal finances. So one thing that I would recommend is, number one, if you haven't got one already, get a personal tax account, which a lot of people often refer to as a government gateway sign-in. So if you decide to do your own tax return, you would complete it via your personal tax account. You can very easily see what tax you owe and when you owe it. You can check things like your national insurance record and your state pension entitlement, your qualifying years. You can check and update your tax code if you happen to be employed as well. And you can use the gateway login to complete all sorts of forms. So there's a lot that you can do with it. And even if you get an accountant to do your tax return instead, it's still a really useful tool to have. So I would suggest, number one, get a personal tax account. Number two, if you are just embarking on self-employment, you need to tell HMRC that you've become self-employed. They won't know straight away. They might find out eventually, and if you haven't told them, there's fines and penalties involved. But it's something that you have an obligation to tell them about. And that's still the case, even if you've previously done a tax return for other reasons, say you've had some rental property, or you've had a child benefit charge, whatever the reason, just because you have a tax return or a unique taxpayer reference or something of that nature doesn't mean that you get out of telling them that you're now self-employed. And the reason that you'll need to do this, even if you have a tax return issued, is that they need to set up the correct national insurance record for you on a self-employed basis. If that's not in place, you may not get your qualifying years of state pension. It could affect things like your entitlement to maternity allowance, if that's applicable to you. It could also mean that you're overcharged for national insurance contributions if you also have an employment in the year. So there's lots of different things aside from the penalties that you need to take into consideration. The main one being, make sure you tell them that you've become self-employed specifically, even if you already have a tax return for another reason. So there is an online form that you can do for that. If for some reason you can't access that, then you can download one and post it, and it's called a CWF1 form, Charlie Whiskey Foxtrot 1. I said that really slowly because I had to think about the words there, but a CWF1 form. Okay. Tip number 3, think about using software. Things like LocumDeck. And LocumDeck, amongst others, is designed especially for locums to help with bookkeeping, and bookkeeping, broadly speaking, translates to recording your income and expenses. It helps with the bookings, the invoicing, the completion of pension forms. It gets everything in one place. It gets templates set up to help with the paperwork. It makes it easy for you or your accountant to get your information together at the end of the year. And it just really helps to have that functionality. So if you are not sure what to do and you don't want to be filling out paper invoices, paper locum A and B forms, etc., think about getting some software in place. Which brings me on to point number 4, which is record keeping in general. You have to keep records of your income and expenses. A lot of people talk about 7 years, which is broadly right. It's sort of 5 years from the end of the tax year and all of this. But if you think 7 years, I need to keep records of my income and expenses. If I'm not using locum software, how will I do that? Number 1. Or if I am using locum software for my income and perhaps my pension, how do I record my expenses? And it could be really simple. It might be that you have an email folder that you drag and drop your e-receipts into and that you can pass on at the end of the year or collate. It might be that you have a spreadsheet that you can note things down on a regular basis. It doesn't matter specifically what it is. Software is perhaps preferable, but you need to be keeping receipts and records in some format. This will become more relevant as Making Tax Digital comes into play. So Making Tax Digital is effectively going to be quarterly reporting to HMRC with a tie-up at the end of the year where you make tax adjustments. So they're expecting information to come through on a more real-time basis for people who are self-employed. It's been delayed several times. There's a lot of teething problems with it, but it will happen eventually. When it does happen, you will need some sort of digital record to pass on to HMRC. So the more that you can train yourself, particularly with software and record keeping now, the easier that transition will be down the line. In theory, it's coming into effect for people who earn over £50,000 a year from April 26. So that's the beginning deadlines at the moment. Expenses. So expenses, this is point 5, by the way, against self-employment earnings are a lot more lenient than the expenses you can claim against employment. The rule for expenses to be allowable for locum work or other self-employed work is that the expense must be incurred wholly and exclusively for the purpose of the business. So what does that mean? It means anything that you use for your locum business, almost anything I should say, can be claimed as a tax relief or a tax deduction. So that would be things like CPD courses, as long as they're related to your business and work. It might be things like, I need a new computer and a new headset because I'm doing a lot of virtual consultations, that type of thing. The most common thing that is not allowed, I'm just going to throw this in here, clothing and glasses, because HMRC think that that's a duality of purpose. For a normal a normal person to present themselves with decency in the world and for warmth, they have to wear clothes anyway. So protective clothing, you might get away with scrubs and things like that. Your regular day-to-day wardrobe, not so much. Clothing and glasses, no. But anything else, if you use it for your business legitimately, or a part of it for your business, it should be allowable. When I say a part of it, perhaps you've purchased a mobile phone and you use it both for your business and your personal life. You could claim a business proportion as an expense against your accounts. How do you work out that proportion? Ideally, back to record keeping, you might keep a sample log of call minutes, how many calls are spent on patients, how many calls are on your personal life, for example, and take a proportion based on actual minutes of use, not necessarily over the full year, but periodically here and there. So if it's something that you use specifically for your locum business, record it, and the likelihood is you can claim it as an expense against your income. As an alternative to that, there's something which is relatively new, it's not been around for too long, called the trading allowance. It's a £1,000 amount, which you can use instead of expenses. So if you have really low expenses or you're just starting out and you don't have much to claim, there's a flat rate £1,000 that you could claim against your locum work. You can't create a loss with it. So if you earned £500 only, it gets capped at 500, but you could have up to £1,000 worth of expenses that you don't have to evidence. Or if you are just starting out and you do a really low level of locum work in the year, less than £1,000, you actually wouldn't need to necessarily register as self-employed or report or pay tax on that income if it's within that threshold. So have a Google of the trading allowance. Obviously, everything has to fit within the rules for that exemption, but that can be a really valuable thing, particularly when you're just starting out. Okay, number 6.6, a brief talk about pensioning in terms of time limits and forms. So as a locum operating as a sole trader, working directly with NHS practices, and I'm saying this slowly and carefully because that's the criteria. So not a company intermediary, not an agency, not for private work, but as a direct NHS GP locum, you should have access to the NHS pension scheme. However, as a locum, you administer the contributions yourself. So you would invoice the practice for employer contributions along with your session fee. You would then submit the employer contributions along with your employee contributions to the PCSE, along with your locum A and B forms. These forms can now be completed via PCSE online with electronic signatures, or you can complete the traditional forms and upload these via the PCSE's Contact Us form. But that's the administration that you, as a GP locum, have to do to have access to the pension scheme. But you also have to submit the forms and make the contributions within 10 weeks of the sessions having been worked. So you need to keep the time limits in mind and those different forms that you need to complete along with the sending of the contributions in mind as well. Because if you miss bits of this off or you're late, then oftentimes that pensionable income can be rejected. You don't get the opportunity to pension it. So that's one aspect of the forms. The other aspect is if you have been employed as a salaried GP by a GP practice, or you've undertaken work which you've pensioned via GP solo, you'll need to complete a Type 2 pension certificate at the end of the year. The Type 2 form is sort of like a tax return, but for GP pensions. Without it having been completed, submitted and processed by the PCSE don't update NHS pensions for your pensionable income for that year or for subsequent years. So it's really important to do. There's no financial penalty, so to speak. You don't get a fine if you don't fill it in time. But your pension record will be held at a point in time until that certificate and the subsequent certificates are then submitted. So not only are locum A and B forms important if you're pensioning your locum work, but if you also have a salaried GP role or a soloed position, you need to fill out a type 2 pension certificate as well. If the only work that you do in the year, only practitioner work, I should say, is locum, you won't need to do one. But if you are doing any salaried GP work or soloed work, you will need to do it, and you'll need to incorporate any pensioned locum work as well. Point number 7, we're getting through them, we're almost there, is consider a separate bank account for your locum business. It's not essential, it's recommended. It can be clearer if you receive all of your income into an account which is separate from your normal day-to-day spending. It can be clearer also if your locum related expenditure comes from that same account. If your accountant, if you have one, ever needs to look over your transactions, it's easier to do so. If you need to pinpoint things and find things, it's easier for you to do so. But equally, should your tax return ever come under inquiry by HMRC, it's so much easier if everything's in one place. We did have a client come to us. They weren't ours before, they had an inquiry and they came to us for help. And in the process of assisting them with this, they sent me their bank transactions for the year, and it was 600 pages of bank transactions, which we in HMRC had to go through to find the business related elements. So as I say, it's not a requirement at the moment, it's not essential, but it could make your life easier and it could make things tidier and neater. It doesn't need to be a business bank account either. It could be a separate current account, just something which is distinct, something which is easier to find your business transactions. Number 8 is a biggie. Save for your tax. I know that sounds really obvious, but a lot of people don't do it, or they don't save enough, and then they are shocked at the tax liabilities they have to pay, and they panic because they don't know how they're going to raise the funds. So as an employee, all your tax, your national insurance, your student loan, etc., it's held back from your pay. It's paid over to HMRC on your behalf every month by the employer. When you're self-employed, you have to make these payments yourself, and it's possible to set up a standing order, but that's not typical. It's not automatic necessarily unless you've done that, and you actually need to think about doing this. The tax payments as well, they come quite a long time sometimes after you've earned the money. So let's say you begin to become a self-employed locum this year. This year, in terms of tax years, is the 24 to 25 tax year, because in the UK, I don't know why, we run from April to April. We run from the 6th of April 24 to the 5th of April 25. That's our UK 24-25 tax year. So for that tax year, you would be due to pay your first instalment of tax 31st of January 26. It's a really long time away, and the temptation will be, oh, I've got money in my account, I'm going to spend it. But what you would be wise to do is to keep back a proportion of your earnings every time you get paid, so that on a rolling basis, you are saving for your tax liabilities as they come. Another thing that people don't consider is that if you earn, or if you have more than £1,000 to pay at the end of the tax year, you get put into the payment on account system, which broadly speaking is paying some of your tax in advance of the next year. So you have an extra 50% again to pay. It's always based on the last tax liability. When your first tax bill comes in January 26, you're actually paying 150% of the tax you owe, rather than just what you owe for that year. It's painful. It does even out. You pay as you go along, it evens out over time, particularly when your earnings start to level out and become similar each year. But the first part is really tough. So if you save on an ongoing basis, it makes that a lot easier to deal with. The other thing that you really need to remember is that when you're making these payments, you aren't just paying tax, you're paying national insurance. If it's relevant to you, you're paying student loan repayments as well. If you have a child benefit charge that applies to you, that gets factored in as well. It's all of these things together. So the tax that becomes due is often higher than people think it's going to be. Sometimes you need to put aside more than you think you do. It's not just, 20% tax or 40% tax. It's all the national insurance, student loan, and the rest of it as well. So save your tax on an ongoing basis and it will feel better. Number 9 of 10, you need to remember when you become a locum that you're not just a doctor anymore, you're a business. And I think people forget that. You're treating patients. Yes, you are a doctor, obviously, but if you're not salaried, you now take on the responsibility that all the other people within a trust or a GP practice or another organization would. So whereas you'd have somebody in admin making bookings, or somebody sorting out payments in and out, somebody sorting out pension administration, all of that kind of thing, that's now part of your remit. You are a business, not just a doctor, and you need to remember that. So if you don't invoice promptly at the end of the month, you're not going to get paid. Sometimes practices take a long time to pay you anyway, but the chances are greatly improved if you invoice promptly. If you don't make those pension payments within that 10-week window, that falls out of time. You can't pension that income anymore. It's all sorts of things like that. So you need to sort of prepare yourself and remember that you're now a business as well as a doctor. And then the final point of, introducing yourself to locuming or introducing yourself to self-employment, point 10, I would say, is invest in your financial education. So you will have been investing in your medical education for years and years at this point. And you'll be good at what you do. That's why you're now a GP. That's why you're now seeing patients, healing them, helping them as best you can. And I often speak with GPs and they sort of exclaim down the phone, I don't know anything about finances, or I was taught how to be a doctor, but nobody taught me about tax. Well, this is your opportunity to do that, and it's never more applicable than when you become self-employed. Just as I said, you're now a business. It becomes really so relevant when you are administering everything yourself. So your finances are an investment, and your financial knowledge is an investment just like anything else. And what you put into it, you get back out of it. Do you have to spend money on that investment? Not necessarily. You could spend time. You can be listening to podcasts. You can be reading articles. You can be trawling through HMRC internal guidance manuals and doing all of that thing. That's absolutely fine. You can be attending CPD courses on finances. But you do need to become financially educated, and that needs to be a sort of segment of your business plan that you pay attention to. Tax law changes all the time. So for me, I have to do I'm a chartered tax advisor, and I have 90 hours of verifiable CPD per year to keep current, aside from everything else. And then every time we have a budget and the tax law changes, which is probably going to happen very soon with the new government, even more changes. So what was relevant in tax and accounting a year or 2 years ago isn't necessarily relevant as you go forward. So there are changes, and whilst you can also be doing things that are technically by the book and by the law, sometimes there's an alternative solution which is more beneficial to you. So invest in your financial education, and if that's not for you or you need some help, then think about an accountant or somebody that can help you, even if it's on an ad hoc basis. And what I would say about that is a lot of people go, oh, but an accountant costs money. think of it as a financial investment, especially if you get a specialist accountant, because you can learn a lot from them, which may enable you to take on part of the responsibility of doing your taxes yourself or all of it in time. But also it gives you that peace of mind of, you know, I've had an easy return, I can do that myself, great, I've done it. Or there's something more complex, I'm just going to sit here and worry and spend days and days and days and days and days churning it over in my mind. So however you decide, whether it's reading and educating yourself, doing courses, or getting an accountant, consider your financial education as something that's important to your business now that you are a business, not just a doctor. So that was my sort of like crash course, 10 points. Think about this when you start locuming. I don't know if there are any questions at this stage or what we want to talk about next. There's a couple of other things I can talk about, but then I can talk for Britain. So Ellie, if you let me know what's happening and if there are any questions, then we'll go from there.
That was so great, thank you. I think those points are always really worth going over, even if you've been a locum for decades, because as you say, tax changes all the time, and making tax digital is going to be a really big change for sure when it comes in.
I'm not looking forward to it, if I'm being truthful, but it's going to be a teething period there, I'm sure.
So as I mentioned at the beginning of the call, we really wanted to have a Q&A segment, and I think that we might have somebody here with a question, but just before I open up the floor to you guys, with just a couple of reminders. We are recording the talk, and for that reason and for other reasons, what we would suggest is if you've got a question about your own personal circumstances, please try and generalize your case so that you're protecting yourself, protecting your privacy and your own data, but also so that you're making what's going on generalizable and something that other people can understand. You can unmute yourself if you're happy to come and ask a question on the recording, but also you can send me a message through chat, and it might be that something that we discussed earlier, we had a question submitted in advance, so as I said, I kind of wanted to raise that one that is submitted in advance and make it generalizable. So maybe we'll start with that, unless anybody wants to jump in with something burning. If you just give me a minute while I go back to my notes so I can make sure we've got all of the key info in the question. Yeah, so Tori, you and I have already talked this through, and you mentioned that this has actually happened to somebody else that you...
Yes, absolutely.
Yeah. So let me just make this a kind of general question. So something I hadn't heard of before, but is going on at the moment, is that sometimes people's unique taxpayer references are being involved in fraudulent cases on tax accounts. And HMRC has a process for dealing with this, and it is an effective process. But Tori, as you said, it's an 18-month process at the moment.
It can be a little bit less, or it can be longer actually. So the generals of the case you described to me, as I understood it, was that this person's data had been used in a fraudulent way, not by them, by a third party. And in order to try and protect that individual, what HMRC tends to do is they shut down everything to do with their tax accounts. So they go, right, if that UTR, that unique taxpayer reference, has been used in connection with fraud or attempted fraud even, we're going to wipe that clean. We're going to go through all of that individual's records, basically put a halt to them all, freeze them until we can discover the extent of the fraud, reissue new numbers and accounts to keep that person safe, and then we'll resume thereafter. Now, the problem with that is you are still faced with tax return filing deadlines and obligations, but no means to do that. So, for example, without a UTR, you can't submit a tax return. If you're locuming in the interim, you still owe tax, you still have an obligation to submit tax returns and financial records, but you can't do that. It's something that HMRC are aware of. And unfortunately, there's very little that you can do to speed up the process. So they put a hold to these accounts. You submit your information as normal, get your accountant or yourself to prepare all the forms as normal. Be prepared to hit the send button as soon as they do send you a new UTR and reopen your accounts. But until that point, you literally are frozen. So they understand that you are immobilized. And what they should do is, if you are, which you inevitably will be, if you're late in either filing your tax return or making your tax payments, they shouldn't charge any penalties. For example, they shouldn't penalize you for them freezing your account. If they do, you can write to them and they generally tend to get rid of those penalties and go, whoops, someone made an admin error. But basically you have to wait the process out, wait for them to reinstate everything. And then as soon as they do, just get all the information and all the payments caught up as quickly as possible to show that, yes, you were compliant in the meantime, you're waiting on them. But unfortunately, this is more common than you would think it is.
That's super helpful. Thank you, Tori.
You're welcome.
I guess the only rider to that that question, and we probably will wrap up in a minute, is there any concern that the HMRC might mistakenly send a unique taxpayer, the new unique taxpayer reference, to the person who committed the original fraud?
Anything's possible. Oftentimes with these cases, they get you to go through a relatively rigorous ID check to get something new reissued. And they're very, very careful about those ID checks and sending the information only to the person who's completed those checks. So I suppose if that person got a hold of your ID and put a different address on it, etc., it could happen, but it's relatively unlikely. We have unfortunately had a couple of cases for clients within our firm where people, third parties, as I say, have somehow got a hold of their details and attempted to set up VAT accounts and all sorts of weird things using their personal information. And I have to say that it was lengthy, but the UTRs went directly to our client, having verified their ID, and there have been no problem since. So from my experience, it has worked out quite well. And part of the reason it takes so long is because they're quite thorough about initiating those checks and then sending the information to the right person. Are HMRC, bulletproof? Absolutely not. We know that. But I would think that the chances, it's not nil, but it's quite low.
That's great. Thank you. We've got a couple of questions coming from Dr. Nicholas. Dr. Nicholas, are you okay to unmute and ask them yourself? If not, you're very welcome to send them in the chat. Oh, thank you.
Hi, thank you for the talk. That was really, really helpful, actually.
Very welcome.
Yes, I had a couple of questions. Firstly, you mentioned financial education. Definitely something I haven't really invested in at all. But do you have any particular resources or podcasts or anything you'd recommend? I was just curious.
There's so NASGP do a number of podcasts, and I've been on one previously with Richard, and there's all sorts of things there. Medics Money do a lot of financial podcasts as well. They're pretty good. You can get general tax advice, sort of like, okay, how do I set up my personal tax account? How do I initiate a UTR? YouTube is great. I know that sounds so basic, but if we're not talking specific, medic specific, it's just, how does this work? How does that work? How do I put this in that box? YouTube is a fabulous resource. There's all sorts of, we've got on our website, we've got lots of blogs. We have checklists for completing financial end of year information, which you don't have to be a client to be able to download. So you could, go onto the website, you could download one of those and just see the types of information that a lot of people typically submit. that might help you. There's all sorts of stuff out there. I can't say, you know, go to this one specific, you know, this is your GP medical training provider for X number of CPD points, but just look around, particularly have a go with the NASGP and Medics Money podcasts.
That's great. Thank you. I will. And my other question was, so my background is I was a salary doctor, and then for 10 years and a partner for 5 years. I've just started locuming, having relocated.
Yeah.
So I have an accountant and everything. The pension forms are very new to me.
Yeah.
And I've been looking at NASGP resources and things, trying to get my head around it. Firstly, I'm finding the practices aren't e-signing my locum A form.
Yeah.
Am I right in thinking they have to be signed before it can generate a locum B form?
Yeah, so the PCSE system at the moment, it holds back the locum B until the A is signed. I think sometimes you've probably done this, but if you haven't gone to the practice manager or whoever it is that has authorization to e-sign these, it's usually a practice manager or someone with certain administration rights. I would go to them and verbally say, or call them up or email and say, I've sent this to you. Can you please log into the account and check the box? Because sometimes they miss the notifications. There's a real problem with the PMs and the admin side picking up on whether or not they should be signed. So if you are able to give them that sort of prod in the back to enable them to do that, please do. But you are absolutely right. Without that being verified, it won't then generate the locum B. And a lot of people find that there's then a timing issue, and the timing of the work has elapsed so far that they can't pension the work.
Excellent. I will. And my final question, again regarding pension forms, is around the timeframes. Actually,
yeah,
I do understand the 10-week timeframe for pension to claim for pensions. I read something about I think there was a 7-day timeframe within the first week of the month. I'm a bit hazy because I read this a few weeks ago.
It's the payment and submission is usually within 7 days from the end of the month. So when you actually send them through and send them into PCSE, and this was more so for the NHS England bank transfers, that's the sort of time frame that they give, is 7 days from the end of the month.
So is there anything I have to do in that first week of the month?
This is probably more an NASGP. This is more of an Ellie question, or
that's
something that our member services team, Ali and Jackie, can absolutely help you with. Marina, have you worked with them before?
I've just started locuming in end of July, so not yet, but I can send them an email or message.
Yeah, they're available by email and by phone during workday hours, 5 days a week. So yeah,
fantastic. Okay, thanks very much.
It is to do with the timing of the payment though, but they'll set you right.
Okay, that's lovely. Thank you.
You're welcome.
We sort of dangled the idea of discussing IR35, so I don't know whether anybody wants to jump in with a question before we do that. We've just maybe got 5 more minutes. Time's really rushed by.
It's because I talk a lot.
No, it's great. Could you do IR35 in 5 minutes, or is that
we can try.
Okay, potted summary.
Okay, so I'm not sure who this question came from, but Jacqueline sent me through and said, oh, can you just talk about this? So the thing I'm going to say about IR35 is a term which is used for a set of rules for workers or contractors and intermediaries. And very, very, very broadly, the rules apply if a worker supplies a service, usually through their own intermediary or company, and they would have been an employee of the person they're supplying the services to, had they provided them direct. And that's a really, really, really wordy way of saying that IR35 specifically usually applies to people working through limited companies, who, if the company wasn't there, they would look like an employee. That's if we break it down into different bits. Now, that's not necessarily relevant to sole traders, people who work for themselves without a corporate entity. But the principle that's behind it is effectively, is this person more or less an employee without an employment contract? And it's not called IR35 for an individual, but we're talking about employment status basically. So if I continue to talk about employment status rather than IR35, it sort of covers both scenarios. So when we look, and I'm going to talk more from a sole trader because I may be wrong, but I think most people here are probably more in the sole trader vein, just starting out locuming. But if we're talking about the sole trader and we're looking at employment status, is it enough to say, well, I'm self-employed, so I can't be employed? Not exactly. HMRC tend to look at how your services are performed. So let's say you are working for one practice, just one practice, and you're working for that practice 3 days a week, always on the same day. You are doing that for 18 months now. They've actually put your name on a door. They've allocated a patient list to you. You got invited to the staff party. Does this sound a little bit like you're being treated as an employee? It should do, if you're in that situation. And what they would say is, well, I know you're not technically under an employment contract, but you're basically being treated as an employee. So as an employee, for tax purposes, PAYE really ought to be applied, which means that tax, national insurance, student loan, whatever it is, should be being deducted monthly from your pay and paid over to HMRC, but also that the practice, the employer, should be paying employers' rates of national insurance, which they don't if you're a locum who's self-employed, but they do if you're employed. It's quite a large expense to them. You should be on the estimates of pensionable pay for pension purposes. So your pension is being deducted from GMS statements, for example, on a monthly basis by PCSE, all of that kind of thing. So basically, if you're acting as though you're an employee, you should be treated as though you're an employee for taxation purposes. That's sort of what it comes down to. So it's a little bit tricky. Technically, the determination should be made by the practice, and it's sort of their responsibility to work it out. But if you have suspicions and you think, well, I don't know, I'm doing all my work here, I've done it for ages, you know, is this or is this not an employment status issue? And you are aware that it's a potential issue, then HMRC could come to you to recover your tax and your national insurance due, etc. What difference does it make otherwise aside from the timing? Well, sort of briefly touched on it earlier, your expenses against self-employment are much more lenient than employment. If you're employed, you can't have any commuting mileage or commuting costs. If you're employed, you can have your GMC sub and your indemnity, but there's a lot of things that you can't claim because they don't meet the criteria for employment. So your expenses plummet, your tax liability, or particularly national insurance is more expensive as an employee, that increases. You have to pay or have PAYE deducted on a monthly basis, etc. It's not as generous, put it that way. So IR35, we're either talking about this being applied to the company or as a sole trader, a freelance locum GP, we're talking about employment status being applied in a similar fashion, in order to make these changes and treat you as if you were employed. So there's a tool on HMRC's website. It's an employment status checker. And if you were to Google that, HMRC employment status checker, you'd be able to pull it up and see it. And you can fill out the questions. And as long as you fill them out truthfully, that's sort of the wrong word to use, but sometimes it can be misleading, or you can think, what about this? What about that? How many scenarios shall I put in? If you fill it in according to your situation at the time, it should give you a bit of an indication. But in your heart of hearts, if you think, well, yeah, I've been here 3 years working for the same practice on the same days, it's something to consider whether or not really you should be on the payroll, and the practice and the practice accountants really should be highlighting this as well. So it's a sort of very brief overview to IR35 and employment status.
That's fantastic. Thank you very much. You really did
welcome.
do it in a nutshell.
Oh,
Perfect.
got through it.
Yeah, so we've had loads of your time today, and we really appreciate that. And just for anybody
welcome.
who's joined us late, Tori Ferguson works for Honey Barrett as a tax manager.
Yes.
And they've been a partner of NASGPs for a long time. They're part of the Association of Independent Specialist Medical Accountants.
It rolls off the tongue better when you say ASMA.
So yeah, they're really, they're not just any accountants. They really know about GPs' accounts. And yeah, it's been really great to have you all join us and give up your lunch hour. So thank you so much.
Yes, thank you.
Yeah, and we'll try and put this recording on our website for anybody who didn't join shortly. So I'm sure you'd all like to thank Tori before we leave. And Tori, big thank you from us, because your content's always perfect.
You're very, very welcome. Thanks, guys.